AMCs across?
Yeah, so we do these calls every Saturday with one of the fund manager. Then we share the links with our clients. We also host it on YouTube.
Okay.
Uh, yeah, so it's gone well. We have done with Satish and one of the fixed income fund manager as well from Tata.
Yes, yes. Mehul briefed me about that. Yeah.
Yeah. We did
Right.
with Akhil Mittal. So that was the last, yeah, on
Okay, yes.
bond.
On fixed
Okay.
income. Correct.
Okay.
So we'll just start right away. Just
Sure.
yeah. So thank you everyone for taking out time on Saturday morning. Thank you, Meeta, for taking out time and addressing our audience. I'll first start with your introduction for the benefit of our audience. Ms. Meeta Shetty is fund manager with Tata Mutual Fund. She has more than 16 years experience in fund management industry. She is currently managing more than 10,000 crores across Tata Digital Fund and Tata Pharma and Healthcare Fund. She joined Tata Asset Management in March 2017 as research analyst, tracking IT, pharma, and telecom sector. Her previous endeavors include services with Kotak Securities, HDFC Securities, Asian Market Securities, wherein she was tracking the pharma sector. She has also worked with Carvey Stockbroking as an equity advisor. She's a CFA chartered holder and a bachelor in economics. Thank you so much, Meeta, for joining in and addressing our audience today.
Thank you, Aditya, and thank you for the entire team to hosting us and allowing us the opportunity to interact with the investors. Yeah.
Right. Meeta, I'll first start with a very obvious question that that is on everyone's mind. We have seen an exceptional bull run in Indian markets. So, what are the key factors that you see that have contributed to this exceptional bull market? And how do you see the valuations of the market overall?
Sure, Aditya. So I think yes, we've had a phenomenal run. I think if I look at the 5 year CAGR for the broader markets, that sits at about 16-17%. If I look at different buckets like a small cap or a mid cap, they are anywhere between the range of 25 to say 40 odd percentage. So it's a phenomenal journey that we have seen, especially after the post COVID years. Over the last whatever 4-5 years. I think a lot of factors actually have led to that clearly. One is that we as an economy in the last 10 years have seen a lot of things move in the right direction. Now, when I say that, if I look at the infrastructure spend that we as a country have done over the last 10 years, to give you some numbers, we were spending close to about 2 odd lakh crores on an annual basis. The budgeted number used to be around that number in say 2013 and 14. That number has actually moved up to almost 11 lakh plus crores in the last budget that we saw, right? And we obviously will have some numbers floating around as we get into the end of month when we have our budget announced again. So I think that if I look at last 10 years, it has been a step jump. So we were at 2, we moved to around 3, 4, 5. So that incremental, every penny spent on infra usually ends up fueling the economic growth. So that is one thing which is clearly being done very well, done right, and in the right direction. Second is that if you look at our banking system, that itself was reeling under a lot of pressure. If you go back, say 7, 8, or 10 years back, even 5 years back for that matter. The NPAs were an issue at the corporate level. A lot of issues that we saw getting grobbed up. All of that also eventually started playing out well, and today we are sitting at one of the best net NPA number at an industry level, which is about sub 1% or so, which was as high as 3-4% a few years back. Third is that what COVID really helped the corporate sector as a whole, if I look at corporate India, was that a lot of saving was done on the expenses. We were not traveling. A lot of savings were done on the operational cost, etc. And obviously there was a need of certain sectors. Obviously, saw a lot of amplified need of their products or services, etc. All of that led to a lot of savings in the balance sheet, and eventually that led to a very healthy balance sheet and a cash flow situation. So all of this actually, when you put that together, ultimately you're talking about an economy which is far more stronger than what we were a few years back, with a far more stronger cash flows, with a far more stronger balance sheet. And all of that means that we are clearly seeing at something unfolding into what we saw in terms of return.
Right, right. And do you think that the inherent volatility of the market, maybe about 5 years back or 10 years back, has come down because of the kind of domestic flows that we have seen in the market? So there's a 20,000 crore of SIP book, and then the mutual fund AUM has crossed all-time highs, and we are not dependent on the FII flows for our. So it has given a lot of cushion to our domestic markets.
Yeah, absolutely, Aditya. If I look at the FII holdings in the Indian market today, that sits at about 16 odd percent, which
Right.
was 21% in 2021. So we have seen a completely years and months and weeks where drawdowns have happened from the FI side, and on the contrary, clearly we've had this positive inflows of the SIP, which have been clearly helping the liquidity. Or I mean, imagine a drawdown of $25 billion from the FIIs in a market like India a few years back. We would have been 20% lower versus where we are today. So yes, the SIP book has grown stronger and it has helped. A lot of people tell me that, or ask me rather, that, are we too dependent on domestic, and is it going to be a risk in itself at some point in time? But look at the numbers and look at the facts. We are just at about 4 odd crore folios in India, in an economy where we are, the working age population is more than 54-55% in an economy with 140 odd crore population. So I think that it's positive. It's a positive direction that we've got onto, and there's a lot more to go as far as DIA participation goes.
Absolutely. Even we started our organization 1.5 years back, and our only pitch was that there are only 4 crore MF investors, where there is 12 crore people who are using Dream 11,
Yeah.
around 10 crore people who are investing in crypto. So there's a huge market potential for mutual funds or the domestic institutions to cover up.
Right.
Uh, and just coming on to the you manage two of the sector funds, Tata Digital Fund. Coming on to that, we have seen some from some of the large cap names in digital or tech sector. They have not performed with the bull run that we have seen in the market. How do you see this sector, and where do you see the opportunity lies in this particular sector, digital sector?
Sure. So I think that yes, the last 1.5-2 years, IT sector has clearly underperformed the broader markets. But if you look at the a longer horizon, then this is a sector which is, I think, inherently a very structural sector, because digital or new technology is the way of life, right? If you're talking about we at a personal level or at an enterprise or a large corporate level, today not spending or not being there with the new tech will eventually make you redundant in the entire scheme of things. So I think that it's a very structural story, yes. But coming to your question, the near term has been challenging, because on one side we had a country like India, which was firing on all guns in terms of corporate balance sheets, or infra growth, spent by the center, or an overall development at an economy level. But IT sector is dependent on the US and the global world for them to generate revenues. And that's where the problem lied, right? Because US in itself has been talking about recession. Obviously, that's a moving goalpost, and we keep seeing that moving every time by another 6 months or a year, at least in the rhetorics and the narratives. We have had interest rates going up phenomenally from where they were 5 years back. So when a client is sitting outside in a country like US or in Europe, and there are challenges in those economies, it will have some rub-off effect on your business as well. To give you some numbers, IT sector used to grow in the range of about 7 to 8% band in the pre-COVID years. That number jumped to something like 15 to 18% in the COVID era. And post that, now, if you look at FY24, the number somewhere is close to about 1.5 to 2%. So there has been a complete collapse in terms of growth because of the reasons that I mentioned. But again, I'll go back to my earlier point that at a broader level, if you look at over a 5 year or 7 year period, I see this sector as a very structural sector, and I think the growth rate should come back to a high single digit range.
And when it comes to IT sector, people are just aware of the top 4 5 names, large cap names. As a fund manager managing a digital fund, what is the opportunity size for you? Total number of stocks that you track, and how do you make a portfolio from that opportunity size?
So Aditya, one way to look at it is that I take down the list of IT services names, which are, if I have to keep some liquidity parameters in place, is as to not go below a certain market cap, I can easily get over 50, 60 names. But you have to also understand that today the overall, horizon of me where I can invest for my digital fund has grown much beyond that. What I'm trying to say is that now you have platform companies, you have fintechs which have got listed in the Indian space. You have a lot more these outside of core IT services which qualify as a digital theme for us, and our go to market size is actually expanded in terms of number of names and the verticals and the segments and even market caps. So it's becoming bigger and bigger, and I keep telling my team that there might be a time when even a HDFC Bank will qualify as a digital company at some point in time with their apps and monetization of apps, etc. So the point is that everything is going into those digital ways, and at least the platform companies is something which has got added. So yes, there are multiple verticals now which I can play around in the theme.
So my only point to bring it out that people just consider 4 5 IT companies as digital companies. There's much more beyond that, and new companies are getting listed which are adding to this sector. Also, you manage pharma and healthcare fund, and this is one sector where I believe that there's a lot of structural changes that India as a country requires to do, and there's a long way to go in this sector, particularly pharma and healthcare. So again, the same question: what is the opportunity size for you in this particular fund, and how do you construct the portfolio, and what are the opportunities that you see in this particular sector?
Sure, Aditya. So I think within the pharma healthcare space, pharma, we've always had a decent number of listings, and pharma also you can further break it down into the core pharma manufacturers or a CRAMS player or a pure API, which is basically nothing but chemicals, as I say, a pure pharma chemical manufacturer. So there were these companies always there. But what we've seen in the last couple of years is that a lot of listings have happened on the healthcare side. We've had multiple number of hospitals getting listed in the space, which has allowed us to kind of expand our bucket in what investable universe I had earlier versus now. So that is one thing. In terms of areas of opportunities and the point that you mentioned that we are seeing some structural changes, I think there are 2 3 changes which we've seen in this sector. One change is more cyclical, to which I would say that the US, which is close to about 30 35 odd percentage of our exports globally. There we have seen that the cycles have actually started playing out in favor of Indian companies. There was a time when the deflation in that market, in the generic piece of the US market, had gone to high double digits, which was kind of having a clear impact on the ROCs that these companies were generating. That has kind of reverted to a low single digit kind of deflation number, which in turn means that now the profitability and the growth opportunities are looking far better than what they were, say even 2 years back. So that's a cycle which is now starting to play back in our favor. which was also the case in 2013 to 15 time. If you recall, that was one of the best times for the sector. And we are seeing something of similar sort playing out right now. On the structural front, yes, there are clear levers and tailwinds which are there. One is that the China plus one, which we keep talking about, and we have seen, that government has also come out with a lot of PLI schemes into chemicals or APIs or KSMs, KSM meaning key starting materials, wherein we had a very high dependency on our neighboring countries, which we are trying to kind of get to a level where we are not so dependent. So a lot of those steps are getting, those steps have been taken, which we will probably see unfold over the coming 1 or 2 years. Another structural story is the Biosecure Act of the US, which they are talking about lowering their dependency on China, similar to what India is thinking. And that will add an additional opportunity which will open up for the Indian CRAMS or the contract manufacturers going ahead. So there are a few structural changes like these which have started to play out and will play out eventually even more in a magnified way as we go ahead.
Right. And one of a very uh, popular question that we get is on the events. We have seen the elections just, uh, and there was a uh, dip that came on the election day, and then the market recovered well and gone beyond that. Now people are talking about the budget coming this month. So how do you, as an AMC, as a fund management house, prepare for those events, and how are you looking at this budget coming this month?
I think you cannot prepare for these events clearly. I mean, nobody thought the way elections unfolded that it will unfold that way. Nobody prepared for it. So I think the events are events and it will eventually have its own benefit or effect, whatever. But I think that what we are thinking, I can tell you, we think that, as I said, that this government was very focused on the infra capex and fiscal discipline. We would want that to clearly continue. There should not be a lot of populism, is what we would be very very watchful of clearly. So I think that is one factor which clearly is something we will watch closely. I believe there can be some softer aspects in terms of rural, etc., and which should be the case because the rural segment has been seeing negative real wage growth for about past few years now. I think for 5 years or more. So that segment is clearly will need some support. It's just that we want that that should be a good balance between the kind of focus on fiscal discipline and on the infra or the capex going ahead versus going too much skewed towards, as I said, populism. So I think we would want to have a good balance. Is the only thing that worries us at this point in time.
One last question. If you can speak a little bit about your AMC, your fund house. We know it manages more than 1,50,000 crores in AUM. So if you can touch some light on your fund house.
Sure. So I would like to start with saying that we have been one of the fastest growing AMCs. Not one, actually, we were the fastest growing AMCs in the last year, and a lot of credit goes to the entire team, right from the investment team to the team where Mehul is a part of, entire sales and the marketing and the product team, etc. So I think it's a team effort which has really played out very very well for us. And even if you look at us, we were about 13th or 14th ranked in the entire AMC industry a few years back, and we have now broken into the top 10 of the list. So I think we are doing well, we are growing well, and as you said that we are 1.5 lakh, under our AUM. Out of that, equity clearly is about 1 lakh crore. And trust me, when I joined this AMC, we were at about 16,000 crores in 2017. So it's been a phenomenal journey, and we've been all been able to be a part of this in this phenomenal run at Tata AMC that we've seen. Thanks to right from the top of the management to the entire teams. I'm sure we all have done and contributed to this in our bit, whatever we could do. So yeah, it's been a great journey, and I hope this journey continues for many more years.
You've almost seen a 10x growth from 16,000 crores to more than 1.5 lakh crore.
So 16,000 crore was the equity AUM, which is now about a lakh crore. Yeah.
Right. Thank you so much, Meeta, for joining in. addressing our audience, giving insights on markets, on your funds. And we look forward to doing such more sessions with you and your AMC in future. Thank you so much.
Thank you. Thank you, Aditya. It was pleasure interacting. Thank you.
Thank you. Thank you so much.